Fantastic. It is great to be here today. And with me, we've got Darren Smith from Finexos. Darren, I don't know if you want to give a brief introduction to yourself and Finexos before we get started.
Delighted to, and thanks, Oli, for inviting me around to do this. It's it's really good. So as Oli said, I'm Darren Smith of Finexos. Finexos is a fintech company that's dedicated to revolutionising the way lenders assess a borrower's credit worthiness, and we leverage advanced AI and machine learning technologies that we've built via a SaaS platform that helps lenders improve their credit decisioning. We help lenders reduce risk whilst at the same time providing them a much fairer and inclusive assessment of a borrower's affordability, which basically means we're on a mission here, Ollie. We're on a mission to drive financial inclusion by making credit more accessible. So, Ollie, my turn now to ask you a few questions about NayaOne. So just give us a bit of an intro to yourself and a quick introduction to NayaOne.
Yeah, of course. I'm Oli Platt. For NayaOne, I head up our client solutions, which is really helping our existing customers kind of run proof of concepts, run evaluation of technology, which kind of is inherently what NayaOne allows. It's this, rather than it taking months to evaluate a technology, understand whether it's going to help you or not, actually being able to do that in a couple of weeks or a month and go, yes, this technology is going to basically decrease the amount, decrease the number of bad loans we've got, or it's going to allow us to implement generative AI in that short period of time. And that's really what NayaOne's doing with their sandbox service piece.
Look, I'd just like to say, as a valued partner of Finexos, NayaOne's been tremendous in helping us with our mission. So thanks to you, Oli, and the rest of NayaOne. So it's brilliant the work that you're doing.
So you've mentioned, Darren, the word, I think, inclusivity there and kind of talking about fairness. So, and I know we've spoken before, and Finexos obviously kind of been using AI for a long while now, not just necessarily in the last 18 months, but kind of the models and the kind of the engine you guys have built is much further spanning than that. Do you mind elaborating just for those kind of listening and watching, like, how is it that Finexos' AI kind of actually does the task that you're set out to do, looks into that credit worthiness, looks into those risk profiles?
Yeah, sure. So the Finexos AI models that we utilize have a much wider range of data points and techniques that goes far beyond the way traditional credit scores or perhaps lender scorecards are utilized today. And what this allows us to do is create a much more comprehensive and accurate assessment of a borrower's creditworthiness. The AI is designed for with fairness in mind. We deploy techniques like bias detection and mitigation to ensure that our models don't discriminate against any demographic group, which can sometimes start to show in the way perhaps lender scorecards are traditionally used. By doing so, we ensure that our credit assessments are inclusive and we represent all communities. How are NayaOne's AI Sandbox solutions addressing the unique challenges faced by the unbanked populations and those that need to access financial services?
So I was considering when we were talking about this question, trying to answer it in a more eloquent way than yourself, but I don't think I'm going to get anywhere near explaining this, like the problem of underbanked populations and how that can be solved. But I think really where it becomes interesting in the way NayaOne is being used in particular is it becomes a safe place to actually add data and run these tests. So with these these complex systems where there's often PII involved. Now, I say that I know the Finexos system actually excludes PII, so not necessarily an example for this conversation, but often there's this kind of a case of it being commercially sensitive data where you need to place it into a kind of a secure spot. And that's really where it becomes really interesting when we can provision these internet-less environments, bring data, bring the technologies, and actually get that answer out really quickly, almost like a neutral playpen that can be used. So it's a really fun spot to be in. Awesome. That makes sense. And yeah, I know you guys work with a whole raft of people. You were talking there kind of about uh, some of these examples you've got. Would you mind just maybe alluding to a use case or something that maybe you are able to talk to slightly just on how Finexos is being used at the moment?
Yeah, sure. So there are actually a multiple use cases. Now, if I can give you two examples, actually, one at perhaps each end of the spectrum. So if Finexos's AI machine learning technology is a better way of identifying risk, identifying a borrower's credit worthiness, then what we can actually do is identify potential risk within a lender's portfolio. So we can actually help lenders reduce, for example, their default rates. And at the moment, we're helping a number of lenders, and the range of how we've been able to actually improve that particular metric goes from 35% up to 72%. That's quite a huge difference compared to the way lenders operate now. But because of the way we assess someone's creditworthiness, we can also identify whether they're likely to be a good borrower or a bad borrower, where actually a thin file may exist. So it's a much more inclusive approach to assessing someone's creditworthiness. So on one side, we can actually reduce bad borrowers and potentially defaulting borrowers, whilst on the other side, we can actually make it a much more inclusive way of assessing someone's creditworthiness.
That's awesome. Thank you. Yeah, it's just those. I think sometimes when you think about those, like almost the use cases that you're already seeing, and those almost that like 35%, that 72%, those quantifiable metrics that you're starting to see there. It's I know for a lot of the organisations and the banks you work with, those kind of almost really bring it home.
Fantastic. And we've spoken a lot about AI already. How does NayaOne ensure responsible and ethical use of AI, when we are promoting financial innovation and supporting your partners?
Yeah, that's a fantastic question. So it kind of comes down into these environments, right? So when you're looking to work with a fintech for the first time, you obviously have kind of the big promises that I'm sure every single person who's ever sold a piece of technology to a bank is making, and rightly so. I think there's a time and a place for sales, right? But then I think the layer deeper, what we're allowing is actually the evaluation of that AI. And we've got organizations that go in and they look for, can this be explained? Can we check that if we basically pump in really biased data, is this model not going to become the most biased technology in the world? And also, there's a more fundamental one of just accuracy. Is this, I guess, this model going to beat what we use today? I think as you were describing the kind of comparison maybe to FICO or something in the credit space, we want to explicitly see we're going to be better than what we've got today. And that's the other side, I guess, of you've got the ethical use, the responsible use. Let's make sure we're looking at the governance metrics is part one, but then part two is actually what's the outcome going to be? Is this going to be a good business decision as well? And just what is the most significant barrier to financial inclusion that Finexos' AI solutions have really helped to overcome in the past?
Yeah, it's a good question. There's a few actually. The one that's the most significant barriers to financial inclusion are people that or lenders that rely on traditional scores and lender scorecards, where as a borrower you just don't fit that particular profile, and that quite often can be because the borrower hasn't needed to access credit in the past, or for a number of reasons just might have that kind of thin credit file. Now, this can exclude borrowers from accessing credit, or indeed it can give them access to it, but at a much higher rate of interest than perhaps that they really should get. So our solution overcomes this by considering a range of data sources that lenders can obtain to make their decisions. And what we do is we take those data sources in and we identify through our machine learning the significant factors within those data sources. We do this in a real-time environment. And then we're able to provide those recommendations back to the lender. And what this therefore means is that individuals who may actually have a thin file, as long as we can still identify those significant factors, then we can identify them as a good borrower, which allows them to get the credit that they deserve. But the real push here is about making the credit fair. So actually making sure that the pricing of that credit is actually an accurate reflection of the actual risk the borrower represents the lender. So ideally making that borrowing a lot cheaper for that borrower.
So Dan, purely out of kind of curiosity more than anything else, I know Finexos is gaining really good traction at the moment, but why now? This has been a problem that lenders and banks have seen for a fair while. What's driving it now in particular?
I think actually there's a number of bits of information that actually, when all combined together, kind of give rise to this new way of looking at someone's creditworthiness. And credit scores have been in existence for decades now, and there hasn't been any kind of significant evolution so far on how lenders look at someone's the risk of lending money to somebody. I mean, I've literally seen scorecards built into a spreadsheet. That there needs to be a better way of doing things. If you look at the rise of high cost short-term credit, the cost of credit or the cost of living kind of crisis, the evolution of AI, better data, open banking data. And actually that creates an ecosystem that if actually we can plug in the technology. And how does that then lead through, the vision of NayaOne's future and how you push and make sure that fintech and the innovations in that space are inclusive and promote better outcomes for borrowers in this case, or the consumers, and what role do you think AI will play in those developments?
So in terms of how this kind of enables inclusive fintech, I've always been a big advocate for this kind of the inclusive kind of fintech. But I think the one thing there's almost a misconception that being inclusive is necessarily a bad thing for the bank. It's not a good financial decision. Now, I don't think that's necessarily thought by everyone, but I think that's almost a poor preconception. What we've seen the sandbox's kind of state be is it actually allows people to validate these technologies in terms of it's going to be a good decision for like integration. It's going to work from technology, but also there's going to be the value there. And as soon as people start seeing, by doing this, I not only get to get the solution in, I not only get to see that it's going to drive me real like money on the page. It makes the cost of loans less expensive, whatever the whatever that's the kind of value piece is. But also that you're going to gain this whole big thing of you're also actually going to be enabling yourself to expand into like further markets. Like that, once you're in that position, I think that's how we probably see it. And the sandbox is this place where you almost dispel those myths really quickly, and you end up going back to those hard business questions, which every fintech should be able to answer, and I think most can. Of this is why you need it. This is the value it ultimately drives for you. And then where does AI probably play a role? I just can't see a world where AI doesn't have a fundamental role here, right? Gone are the days where you can spend hours and hours and hours analyzing every single decision, and hope even if you could spend the time and if you wanted to spend the cost, right? There's no way a human is going to ever be able to get to that very, very detailed answer in the same way that AI is going to get there. Is it going to be the AI in the current state? Is it going to be some like rule-based AI with a generative AI in the back and some more traditional AI neural network alongside it, all allowing it to remain not sustainable, but explainable rather than sustainable Yes, I imagine so, but that's, I guess, where I would probably see it going.
Yeah, no, good, good. Thank you.
Fantastic. All right, go for some of the one thing I guess I like to do at the end of these sessions, Dan, is just basically ping you in a couple of really fast questions, not spending too long in it, but just for people to get a bit of an idea as to kind of how Finexos is set up, maybe some questions that, as we've been talking, maybe they've thought of themselves. So I've got a couple of questions I've noted down as we've been talking and had a couple of thoughts beforehand. Am I right to we'll see how the knowledge of the company you run is?
Great. It sounds like a test.
Yeah, it's exactly that. All good. All right. So question one. How does Finexos' approach to AI-driven financial inclusion differ from the more traditional methods?
So we spoke about inclusivity before. We spoke about AI for good, and that's really the foundation and what kind of differentiate Finexos to perhaps competitors. So if you look at traditional methods that rely heavily on conventional credit scores and credit files, our AI-driven approach incorporates a much broader spectrum of data without the need for having to share any PII information with us. Now, this allows, once we provided our results back, this allows lenders to serve a much more diverse population. And because the AI solution is always learning to optimize the opportunities that lenders may be missing out on, it's also trying to become more inclusive while still looking at the same time to reduce the overall risk of lending for the lender.
Fantastic. Right. Question two. Can you provide an example of how Finexos' AI models have successfully identified and addressed biases in the past?
Yeah, so our AI model is able to identify patterns of bias in existing lending decisions with lenders that may disproportionately affect, a specific demographic group. And by analyzing the underlying data and decision-making processes, we're able to pinpoint the particular source of that bias. Now, this, makes it possible not only to correct the bias, but also to improve the overall fairness and accuracy of the credit assessment. So we can ensure that, all borrowers are evaluated based on their true creditworthiness.
Seems very fair. Passing the test so far. Question three. How does Finexos ensure responsible and ethical deployment of AI across your solutions, probably particularly concerning the data privacy and fairness?
Yeah, no, it's a brilliant point and something that we take really seriously. There's lots of talk around kind of AI for good, AI for bad. So what we absolutely make sure is that the AI model we've built is on the principle of bias removal. We continually monitor and supervise our results to ensure that bias does not creep into the model. And as I mentioned, our AI is designed not to require any PII information. So, we have stringent data policies, we're ISO accredited, and this ensures that the data that we do receive is handled, extremely secure.
Awesome. I guess next on more of a how you're helping the banks, but how does Finexos AI enable regulatory requirements to actually be met?
Well, it was built with compliance in mind. We're currently members of the FCA's innovations pathway team, so we're engaging with the FCA constantly to make sure that what we build is in line with regulatory requirements. And if I can say, I think to some degree, perhaps they're also influencing what future regulation around AI may look like as well. With compliance in mind, this is the same AI that's used to assess a borrower's creditworthiness, is the ability to assess a borrower's affordability. Now, if you kind of look at traditional models, there are two regulatory risk points that every lender needs to assess. One is the credit risk, one is a affordability risk. And affordability risk is probably one of the weaker points of those two. Lenders may validate somebody's income. They may do some basic debt to income ratio test, etc. But actually having a deep understanding of the borrower's affordability is more of a tick box exercise. ONS data may be utilized in calculating some form of algorithms. And what our AI model effectively does is assess the borrower's true affordability and really what their financial capability is, not just at the point of decisioning, but actually we can monitor their financial capability during the life of the credit product. So essentially it's monitoring the borrowers and identifying any signs of financial vulnerability. And this allows lenders to be, hugely proactive with anybody that shows some signs of financial distress, and allows lenders to truly comply with the consumer duty regulations.
Fantastic, yeah. And consumer duty is absolutely something we're hearing quite a lot of people talking about all the time. I guess final question from me. We've spoken about AI a few different times today. Do you have any exciting new AI-powered products or services that are maybe in the pipeline or already just come out for you guys?
One of the products I'm most excited about, if you compare the way consumer data, open banking data, and the way data is effectively structured, which allows consumers to get real-time decisions in the world of credit, is very limited in the SME space when dealing with kind of business loans. A lot of the work, the data is unstructured. There's lots of manual underwriting in place, and we're part of a working group at the moment that is looking at how we can use the technology within open finance to allow structured data, which will show a fair assessment and understanding of an SME and whether they're creditworthy. And just as we described with the consumer borrowing, Finexos is able to ingest that data and support lenders in the SME space make, again, more inclusive, reduced risk, just better assessment of businesses and whether they should be offering credit to those. That could really transform the market. You think of how, with an election looming, how there's a big focus and how actually we can support businesses and how they can develop. And access to credit can be one of the most fundamental things any business can do in order to be able to grow and improve its services.
That's it. Those are all my my rapid fire-ish questions to you, Darren. So just from me then, I just wanted to say thanks for being on and having a little chat today. Obviously, we've always got Finexos in the marketplace, and if anyone's watching and is excited or has some of the problems that maybe Darren's described today, please reach out. Please, if you've got an NayaOne's Sandbox, please come there, test Finexos. Always a really, really interesting product to look at. Darren, I don't know if you had any other final words.
Yeah, just a final point. It may come across as a sales point, so forgive me in advance. You kind of mentioned that we're in, we're partnered with NayaOne, we're part of your network, etc. And partners may want to find out more about what we do and how we could do it. And just to allow those firms to know that one of the things we are able to do is apply what we call a retrospective analysis. So that this is effectively a bit of a try before you buy kind of concept, where we can analyze data and lending decisions that have already made, utilizing the same AI model, and almost do a bit of a blind test where, using our machine learning, we will predict whether they ended up being a good borrower or bad borrower. And because the lender has the results already, we can do a straight comparison between their traditional scorecards or their methodology of assessing creditworthiness versus Finexos. And we can effectively do that test with any particular data set. We've done it, hundreds of times now already, and we've yet to actually obtain a data set where we haven't been able to show some form of improvement in how the lender can make a better lending decision. So there's a bit of a challenge there, I guess, and I welcome anybody to try and challenge us.
Fantastic. Yeah. If nothing else, you've got to take Darren up on the challenge.
Prove me wrong.
Exactly that. All right, Darren, it's been a pleasure speaking to you today. Thank you for being with us.
Absolute pleasure. It's great to catch you again, Oli, and look forward to speaking to you again very soon.
Look forward to it.
Thanks now.
Thanks.